How are you doing? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world, Options Trading Academy. And what we're going to talk about today is investment risk market timing. So we're going to be doing another one in our series of investment risk. That's going to be under the playlist, I believe, going to be called The Markets on the channel. And the goal of this particular series is to try to help you as an investor understand some of the risk around investing. So when you walk into the investing space, you are more aware, you're a little bit more astute, you're a little bit up on game, you're up to speed as what's going on. And this particular series is going to appeal to the person that wants to get outside of the retire at 65 investment platform or investment model, right? The average American's operating, if they're lucky, if they're fortunate, they got some type of 401k applied to their job. Maybe they're in a pension, really based on retire at 65. So your time horizon is going to be 65. So when you start in that particular plan, your time horizon is decades out. The challenge is that when you get into any investment that is going to be on a shorter time horizon, and what I mean by that is that it's less than 25, 30, 40, 50 years away. Often you may not be educated on kind of how to approach those type of situations. And often financial advisors, CFPs, people of that particular, I would say, background or framework may not have a really good understanding because they make the majority of their money just setting people up with the 65 years old, 70-year-old time horizon retirement plan, right? So that's kind of the model they've been trained for. So if you're looking at something different, you maybe want to understand something different. This is cool. This series was created for. I'm not licensed to sell any financial product, right? I'm not licensed to sell insurance. I'm not licensed to sell you a stock. What I'm doing is I'm giving you my opinion based on what I've learned, what has worked for me, and what has put me in a better situation. And also the things that I wish I knew about this particular space and what people could have told me that I didn't know until I finally was able to figure some of this stuff out on my own, right? So that's who this particular content is going to be for. So what we're really going to kind of go into is this question of, can you make the market produce on your time, right? Because this is a challenge for a lot of people coming into the space to where I'm in an investment and I'm 30 years old, but this investment is not designed for me to get out when I'm 65. Or I'm 50 years old, but this investment is not designed that I'm going to get out in 15 to 20 years, right? Maybe you're in something and they tell you the time horizon is 5 years. Or maybe you're going into a market and you don't necessarily kind of understand how this market is composed, how it's set up. You want to start asking yourself, can you make the market produce on your time? Because that's a challenge for a lot of people because they're getting into deals and they may be under the impression that this deal is going to go a certain way. But the question they should have kind of asked themselves before they got into the deal is, can you make the market produce on your time, right? So that's what we're going to kind of talk about. That's who this video is going to be for. And that's who I think will get the most out of this particular content, especially if they apply it in their day-to-day life, looking at things like an investor. This type of perspective has been very beneficial to me, but not only as an investor, but also as a trader, right? So that's what I want people to understand. So really quickly, the sponsor of the show is going to be www.thehighestpaid.online Options Trading Academy. And we created that Options Trading Academy to really help people understand the financial markets, but to really help them live the life that they desire. We have a lot of people that are working. They're not necessarily bringing in the type of money that they desire, and they really don't know what else to do to bring in money, right? We got a lot of people where they got to drive 25, 30 miles away from their home to make the money that they desire. And we also got a lot of people that are dealing with a lot of the inflationary efforts, and they really don't know how to bring in additional income. And one of the things we're able to do, and one thing that I have been able to do, is figure out how to make money out of the market without having to ask somebody whether or not I can go to work, right? And put myself in a position where I felt like I had a little bit more autonomy, but also having to deal with this issue of market timing. So I'm going to kind of talk about this also because an investor, and when I say investor, people have this framework is that you have to be doing from 30 to 65 to be an investor. You can invest, in my opinion, right? I'm considering you an investor if you're looking to get a return on your capital in any situation. It can be 90 days, it can be 60 days, it can be 120, it can be 6 months, it can be a year, it can be 5 years. I don't see investing as you got to stick your money in something for 3 decades, right? I don't see that the only definition of investor. And so this concept of market timing has really helped me a lot as a trader because I had to understand I can't make the market perform when I wanted it to perform. And then how do I deal with that? So as a person that's looking as an investor, but also as a trader to generate a return out of the market, how do I deal with this particular idea of market timing, right? How do I create a framework that works for my life around market cycles, right? Around market seasonality, around markets not having a lot of liquidity. What I mean is that there's not a lot of money in the market when I go in. Around there not being a lot of buyers or sellers in the market. How do I deal with that based on my particular portfolio objectives, my personal objectives, my income goals? How do I deal with that? And so there's some of the things that we're going to talk about today are discussed in the course, and they can kind of help you. And I really do believe that the benefit that I believe the community, me, myself, and I'm not trying to like toot my own horn, but also the curriculum provides is that you leave out of the space and you have an ability to go into different markets and operate and understand what's going on and not having people talk over you, talk around you, talk through you because you're clueless, right? But it has to be something that you desire to have that level of understanding, right? So that's the URL to the course. I want to really encourage you to look into it. However, if you don't buy anything from me, there's over 1,000 videos on this channel. 90-something% of those videos are market-based. So the video I did Thursday, a lot of people would jump onto that. But just to be real with you, 90% of the videos on this channel are around the markets, right? Because that's the goal of what my assignment is, to help people understand these particular points, right? So therefore, when these situations pop up, people are not talking through you. They're not talking over you. They're not talking around you, and you have no idea what's going on, right? And you're not thinking that you know that you know, right? And I don't have anybody's certification. I haven't got anybody's license, right? But I know when it comes to a certain basket of topics based around the markets, based around econ, I know what I'm talking about, right? There's no doubt in my mind. And so that's what I want to try to help empower you. And you will get that. It's not just, you're just going to learn the options course. The conversation is a little bit more robust, but you have to desire that ability, right? But everybody that's taking it and running with it, and I don't want to like put people on Front Street because they may not want you to know their business. They benefited from it a lot, right? And they speak to it. It's in the testimonial videos. I found out about it when I did both my events. People spoke to it. It's just we're not able to get a lot of these people to step out in front of a lot of people and say, hey, this and this took place because of this, because I know everybody don't want to be on the spotlight. You know, a lot of people live in environments that where once people figure out you got it a certain way, they're going to come ask you for it. So what a lot of people do is they just avoid it. And everybody doesn't want to be like an internet lifestyle marketer. So I want to really encourage you to look into that, right? So let's get right back to it. So we're going to talk about, can you make the market produce on your own time, right? And if you really appreciate the content, if you want to hit me up on the Cash App, you can hit up David Weswill on the Cash App. I appreciate it. But if not, don't worry about it. Again, we got over 1,000 videos on this channel to help you understand these particular topics. And you don't have to go through them all at one time. They've been up there for pretty much going on 4 years. You can continue to matriculate through the content at your own speed. But it has to, again, to be something that you very much desire to do, and it's sitting right there waiting for you, right? But you can hit up the Cash App if you want to send me $1. I appreciate it. Can you make the market produce on your own time is going to be the topic, right? So what I want you to understand is that many people, they confuse this concept of market timing, okay? And there's this narrative that's put out is that you can't time the market. There's only time in the market. That's a really cute colloquialism. It's really cute, right? It's real cute. It's like a kid, you know, how kids dress for Easter. You know how cute that is? It's like that. It's cute. Doesn't mean anything. And so a lot of people get caught up in that because they don't really understand what's going on around them. So let me give an example. If you buy into a 60-40 fund to retire at 65 and you're 30 years old, you're timing the market. Because your belief is that when you get ready to retire, there will be something there for you to retire on. Okay? If you get into a 401k with your job, and let's say you come in at 30 years old working for this company, and you're going to retire at 65, so you put money in a 401k, they match. You're timing the market because you're operating under the belief that there will be a market there and conditions will be good enough for you to retire with something, which is reason why every time you get paid, you put a certain percentage of your money into the 401k, right? Sidetrack, I was watching Boeing negotiating with their machinist. Boeing's giving those guys 8% or match on a 401k. That's crazy. I was working for a hospital giving us 4%, and I thought that was decent. Boeing's giving their people 8% on their 401k. They should take that all day. All right. I know they want other stuff, but 8% on a 401k, that's good. That's real good. But when you're doing these type of deals, you're market timing. So this really cute colloquialism, right? Like Easter, like kids that are dressed for Easter. You know, you take the little kids and you dress them for Easter, and the girl got the dress on and the boy got the suit on. They just look real cute. That's what that is. It's very cute, but it doesn't really apply to the real world, right? Anytime you invest, you're timing the market, because you have to operate under the belief that when you exit the market, you're exiting at a greater point than you did when you got in. If that wasn't the point, why would you invest in the first place? So why would you buy into a 401k if you didn't believe when it's time for you to exit, you're going to exit at a higher amount than you did when you went in? Because if not, why not just put your money in cash, right? You understand what I'm trying to tell you? So this is one of the things I'm very passionate about, is getting these colloquialisms. Because let me tell you something. Let me hit you to some real game. When they teach you how to speak, you take learn how to speak in front of crowds, when you learn how to be a persuasive speaker, unless you know that your audience is at the same level that you're at, they teach you to dumb down the conversation to talking points that people can latch onto relatively easy and move forward with it, right? Unless you know that your audience understands the content. The challenge is that many people take those talking points and then they recirculate them through society, and they now start to think that they know what they're talking about, but the goal of the talking point was never to explain what that meant in the first place, right? So there's a lot of mythology, there's a lot of falsehoods in these spaces, because what happened is somebody took something that was very, very complex, and instead of explaining it, they boiled it down to talking points, and they gave the talking points out to an audience that didn't understand it, but they never really explained what it meant, and the audience took it and they ran with it. So they're recirculating that amongst their own groups. So people are believing stuff like, well, you can't time the market, you should only time the market. Okay, if I can't time the market, why would I ever buy real estate? Like, why would anybody ever do a fix and flip if they can't time the market? Because if you're doing a fix and flip, you have to believe that after I do all this work, I can sell the house at a greater amount than the work I put into the house. You got to believe that, which is essentially timing the market. Or let's say I go buy a car at the auction. I get it detailed, right? Get it fixed, take out the major mechanical issues, and I go and sell it. I got to believe I can do all that and sell at a higher price than the work I put into the car, right? So the question you want to ask yourself is, can you make the market produce on your time? But you understand that I am trying to time the market when I'm involved in really much any market-based activity, right? If you know that there's going to be an SEC championship coming up, and you go get a bunch of shirts made for the team that's going to be in the SEC championship, and then you go out here in Atlanta and you sit on the street, and as people walking into the game, you try to sell them the shirts, you're timing the market, because you have to believe that there's going to be a market there for you to sell your wares or sell your goods that's going to be greater than what you paid to get them, right? So you're timing it. You're believing that there's going to be something about this market that's going to be lucrative and productive for me. So it's willing the initial investment that I'm putting in, because I'm taking the risk to go get these shirts from whoever, get them made, bring them back with the hope that I can sell them at a higher amount than what I paid for them, not also including the work that you got to put in, right? So that's what I want you to understand. Market timing is going on all the time around you. And if you're in any long-term retirement fund, you're hoping to time the market. That's how long-term retirement funds work. You're not doing that for the market to lose money on your long-term retirement. So you don't want to happen is that what happened to a lot of people like 07, 08, 09, where you time to retire and you realize you can't retire because the market has crashed. That's not what you want to happen to you, right? So I just want to go ahead and frame this properly so we can kind of understand what we're talking about, because one of the things I'm really passionate about is getting people to where I believe I'm at, and I'm not at this elite level, but the goal was never to continue to talk down to you. Is to get you to understand it to where we're having a parallel or equivalent conversation. That's really the goal of what I'm doing. And I've been very successful at that over time. Drop 16 talked about that. I want to say maybe last week or the week before, where things that I'm talking about on the YouTube 2 years ago when he first bought the course, he didn't understand it. He understands it now because he's been very consistent with learning, right? And so at his young age, he's been able to figure these things out because when I was his age, people weren't talking to me about this stuff. But he's been very diligent and very consistent about continuing to learn the material. So now when he and I sit down and have a conversation, the conversation is horizontal. It's not I'm here and other people are talking here. But a lot of people, their ego, I think, is tied into that. And mine isn't in this particular space, right? Only thing I'm going to try to act like you don't know what you're talking about is probably sports, right? Because I'm just like that. I decided that years ago, like, I'm just not going to talk sports with certain people because I just feel like they don't know what they're talking about, right? So let's keep going. So that's kind of what we're going to talk about. So one thing I want investors to understand is you cannot make the market do what you want when you want, right? When you go into the market, you can't make the market move because you want the market to move. It's impossible. And where we're standing, we don't have enough capital in 95%, 99% maybe of situations to move the market when we want to move the market, right? There's something called level 2 data in the stock market. And what it kind of showed you was that, like, who's putting the bids in markets? When I say bids, and also the ask. So who's putting the bids and the asking on the market from an equity standpoint? And that's who's asking for a price on stock and who's bidding for the price on stock. And what you can see sometimes on level 2 data is you can see Goldman, you can see JP Morgan. Let me another investment bank, maybe say Goldman, JP Morgan, maybe BlackRock. But you definitely can see Goldman and JP a lot of times, but especially Goldman, do what we call pin a stock. And what I mean is that they'll put a stock ask somewhere. And what it a lot of times mean is that the market won't move above or under that particular number because they have so much capital. They can go into a market and move the market, right? What you have to understand is where you're at. You can't make the market do what you want to do because you don't have that ability. So you have to always operate from that framework, and the market's going to do what it's going to do. And I just have to adjust to the market. I tell people all the time as a trader, it doesn't matter what your narrative is. You got to trade what's right in front of you. So you could come into a scenario with a narrative on how this thing is going to go. You got to trade what's right in front of you, right? Because human beings are going to human being and they're going to see what they're going to see. And you often cannot control that. And, you know, there's a saying in the world that if you want to make a lot of money, you lie to people that want to be lied to. If you want to make a living, you tell people the truth that want to hear the truth. And if you want to go broke, you tell people the truth that want to hear a lie. And we're in a world where people are telling other people that there's a robot that has artificial intelligence. And if you listen to the robot's speech, it's obvious that it's a person talking. Right? Because robots can't do conversational English. They don't have the ability to. You understand what I'm trying to tell you? However, this is the world we're in. So it doesn't matter how I think about that scenario. If enough people buy into it, right, I have to deal with what it is. I can't make it be what I want to be. And I will go broke trying to get people to realize what that is. Because if people want to hear that lie, it is what it is. Right? So you have to really understand that. So that's what I want you to understand is that you can't make the market do what you want when you want. And you will go broke trying to do that because you can't fight the market because you don't have the capital to do that unless you have the capital to do it. And if you did, I don't think you'd be on this live stream. You'd probably be somewhere else do like, so maybe the Saudi fund can make the market do what they want to do because they have so much money, they can move the market with their money, right? And they don't even do it. And they have the money to do it. So really quickly, I want to kind of give you a really quick video on market timing and some of the risks that you can take going into a market because you can't control the timing. And what I want to really encourage you to do is look at this video from that framework, not look at it from what they're telling you the stories about, right? So I'm going to give you a heads up again. We're talking about market timing. We're talking about you going into a market and kind of understanding that you can't do what you want to do in the market, and the market's not going to move for you just because of how you want it. And I want you to look at this particular story and look at it from that framework. That's what I want to encourage you to do, but not necessarily from the slant that the media is trying to put on this particular story. Okay, let's get into it.
Prospectors have been punching holes in the barren plains of the Permian Basin since the 1920s. There's black Texas gold more than 2 miles below. Maybe. What? The economics of the oil business have changed. So has the playing field.
It's great to be a woman doing this.
Tammy McCormick has seen prospectors strike it rich and strike out. She became a Texas wildcatter 4 years ago, joining the Boys Club of Gamblers, seeking the next big gusher. The men doing the deals initially thought she was someone's secretary.
Oh, probably at first. I think there is some resistance just because they kind of think maybe you're just making the call and they're waiting on the man to get on the phone, but no, that's not happening.
Today, McCormick is the CFO of Mexico Energy.
Our Loving County well is right here in the middle of this. This is a deep, prolific producing trend right here.
Together with geologist Jeffrey Smith, McCormick considered oil fields all over the world, but decided to explore the one right under their feet.
It's far easier for us to do business close to home. If there's a problem on a well, I want to be able to get in a car and drive out to it.
Their wells are in an aging field the majors abandoned in the 70s. At today's prices, they may wish they had them back.
I think it's just created a huge opportunity for smaller oil and gas companies like ourselves.
An opportunity to strike it rich or become the latest dry hole. A gamble as big as West Texas.
Okay, so the reason why I want to kind of show you that, because wildcatting is a great example of investment risk, market timing, and you not having the ability to make the market produce on your own time. Now, many people ask, well, what is wildcatting? Wildcatting is that when you go to dig a well and that well has not been established, right? That oil field has not been established, that oil area or oil patch has not been established, or it's been believed to be exhausted, but you may believe something's there. So you may have a major hit a particular area, believe they've exhausted pretty much all the easy oil that can be gotten, and they abandon it. They, exhaust their lease, they leave, and you can come in after that because you and your geologist believe there may be something here, and if we can hit it, it can be very, very profitable, right? And the Texas oil industry really started with wildcatters. Then once they kind of established it, then you had like the major corporations come in, because that's a lot of times what happens is that individual operators, guys who take a lot of risk, they set the market. And once they set the market, then you'll see the established players come in because it's very little to no risk, and they can come in with the technology. They got the infrastructure, they got the systems to really scale this thing out, right? But the whole Texas oil space, West Texas, but also East Texas out there by Beaumont, Port Arthur, was really started by wildcatters, guys who would take a lot of risk, take a lot of danger to find this oil. Some of them got rich, a lot of them went broke, a lot of them ended up dead, a lot of them ended up maimed. These things happen, right? But that's what I want you to understand. So this is a great example of that. So when you wildcat, right, there is no guarantee that oil will be there. There's no guarantee, right? Nobody can see under the ground and see the oil like Superman. You have a geologist, it's a probability, there's a chance you're taking, but there is no guarantee. There's a risk involved, okay? So just because you're wildcatting, it doesn't mean there's going to be oil. So what you can do is that you can currently right now go invest in oil wells, right? There's people trying to get oil all over this country. In fact, America is the largest oil producer, right? There's oil all over America, which is a very, very resource-rich country. And you can invest in oil wells. There is no guarantee you're going to hit anything. You feel me? It doesn't matter if the guy hit the last 10 wells. There's no guarantee this one's going to work. But that's a risk that you're going to take. But if it does work, it can be very, very profitable. But there's no guarantee the oil is going to be there, right? And so this is very much a big deal. This is really a real life situation. There's people that have their own oil wells on their own private land. They manage their wells themselves. They make a decent amount of money. They don't get rich, but they have oil on their land. Like, this is real. So people may know this old show used to come on Nickelodeon called the Beverly Hillbillies. It was in black and white, where the guy found oil on his land and hit it rich and was living in Beverly Hills, yada, yada, yada. like that can potentially happen, but maybe not to that degree. But it also depends on how much oil's under there, right? He had a real big oil claim. I think he was shooting at something and oil came up, but that was a story, right? But there's no guarantee oil is going to be there. So in the wildcat space, you can go rich, you can go poor, you can get rich again. That's how the game works, right? You can get rich, you can go broke and get rich again. There was an article I was trying to find it was in a journal years ago. And there was a guy living in Texas. He's a billionaire, older dude. And he was talking about his particular experience wildcat oil. And one thing he talked about was that he had so much love and admiration for his wife because he said it. We've been rich, we've been broke, we've been rich, we've been broke because he was a wildcatter, right? And he stayed in the game. So his wife dealt with him or rode it out with him through multiple upswings and downswings. That was the industry, right? Because not only are you trying to deal with your individual market and you got the overall global market for oil, and what you want to understand is that you can be in an environment where it doesn't make any sense to wildcat. Just like you can be in an environment where it doesn't make any sense to do shale oil, right? All of these particular type of extraction techniques, the market may not make sense. And if that's what you do, now what do? You really got to wait for the market to rebound back to make it make sense. And so that's something that you want to understand. What I want to ask you, because we're talking about investing in things in the market, what do you think has to be the price of oil to justify the risk of wildcatting? Because if you want to invest in the major players, you just go buy ExxonMobil, Chevron. I don't know who the other ones are, right? I just know about Exxon because I own a little bit of Exxon. If you want to invest in the major players, you just go hit them up. They're already established. But if you're looking to invest in like individual whales, wildcatters, smaller oil companies, what do you think has to be the price of oil to justify the risk of wildcatting? And this falls in line with our investment risk narrative, but it also falls in line with our market timing narrative, but it also falls in line with you understanding what's going on. If somebody pitches you to invest in an oil well, what needs to be going on with the price of oil to justify what that person's doing? Do you know that? Because if you're not aware of that, you could be getting pitched a bad deal and you just don't know it, right? Because there's going to be an environment to where people are going to be throwing money at oil exploration. And there's also going to be an environment where people are not going to be trying to give money to oil exploration because the price of oil, based on where it's at, it just doesn't make sense. You understand what I'm trying to tell you? And with oil being a global market, you have to kind of understand the whole thing comprehensively to really understand what you're doing. You feel me? So this is why having an understanding of the space and understanding investment risk and understanding market timing is really, really important. Therefore, if somebody pitches you this type of deal, you understand based on where the market is currently at, whether or not this deal even makes sense. Okay. Unless you're just looking to get maybe like a tax write-off. So investing is a skill that when used at the right time has a potential to be very, very profitable. And this is why I'm passionate about teaching people this. And to be real with you, this is not something that I've always participated in. But just because I've missed out on investment opportunities doesn't mean you have to miss out on investment opportunities. I'm not talking to you like I'm a master investor. I'm not talking to you like I got a $10 million net worth of investing. Well, the reason why I'm trying to get you to understand this is because if I've missed out on opportunities, there's no reason why you have to also miss out, right? If things pass me by because I didn't know or I wasn't focused on it at the time, it doesn't mean you got to be in the same position, right? And so what I want you to understand is that once you kind of know these particular skills, you understand what's going on around you, you can put yourself in a position to be very profitable because of market timing. So let me tell you a really quick story. I used to follow this dude on social. They out in, I think, Dallas. They down in Texas. And they made a lot of money in, what do you call those things? Mobile homes, manufactured homes, but they made a lot of money in the parks. So, you know, you got manufactured homes that's sitting on individual land, but they made a lot of money in the parks, right? They would buy the homes in the parks and then rent them out, get cool with the park owner, yada, yada, yada. So that's how they made their bread. But they really was real estate dudes, right? Even though the home is not, the mobile home and the manufactured home inside the park is not considered real estate. It's considered private property based on my understanding of it. But they really was real estate guys. So one of the guys explained that he was in the real estate game, doing this thing. We had the big real estate depression of like 07, 08. And he uses really, really complex financing strategy to accumulate a lot of real estate in that time because a lot of people was under distress because of that situation. And so because he understood this really, really complex real estate strategy that a lot of people talk about, but it's probably less than 1% of most people's portfolio, he was able to accumulate a lot of real estate during a very short amount of time, like 5 years. After that 5-year run, he had a multi-million-dollar net worth. He didn't start that way. He was just a regular real estate dude. But he understood the market. He knew what was going on. He understood that he could leverage this particular financing strategy. It was very much like a creative financing strategy. But he understood the space. He understood how to operate as an investor in that space at that particular time. And so that's what I want you to understand. When you understand how these pieces work, when you understand the scope of the market, what you're really waiting for, and I talked about this with Drop 16, I believe, last week, is you're waiting for the right situation to present itself, right? You can't force it. You can't make it go your way. The goal is to be patient, continue to build your reserves, continue to build your expertise, continue to sharpen your sword. So when it's time to do it, you're now ready to move. And I think that's what a lot of people miss, and we're going to kind of talk about that. But you want to have an understanding, right? And some experience to be able to recognize an opportunity. There's an old saying is that, I don't know what it's called. It's called like measure twice or measure so many times and cut once. Or, sharpen your saw and get it real, real sharp. And it makes it like easy to cut down a forest of trees. I think a lot of times we as investors, we have so much a desire to see the result of what we're doing. We want to rush it. And I understand that because I've been there also. I know a guy who was teaching like how to do rehab in the home space out here in Atlanta. People buy the home, they rehab it, they put it back on the market, they make money. And he had like, I don't know, we're going to call it mentorship, whatever, in that particular space. And he said one of the things that would happen is that people would go through the program and then they would be very much in a rush to do it because they want to kind of prove their worth and prove what they paid for in the program. And he said what happened is that they would go find a wholesaler and they would try to get that wholesaler to give them the house. And when he would look at the deal, he'd be like, you're overpaying for this property. It's not worth this. Right? But they were so much trying to rush it. Because I went through this program, I paid a few $1,000s to go through this program. Now I want to justify my existence in the space. And what he would try to help them out is that maybe you just want to sit back and wait for the right deal to show up. As opposed to going to this wholesaler and just getting anything they throw at you and trying to buy it. Because he says the problem is that if the numbers don't work on the front end, the numbers ain't going to work on the back end. What I want to really encourage you to do is try to have an understanding and some experience and then be able to recognize the opportunity that presents itself as an investor, right? Do I have an understanding of what's going on in this particular market? Do I have a little bit of experience in the market? And then now can I recognize the opportunity? Next thing, can you stay in the market till it turns your way? If you're in a market, can you stay in it till it moves? We talked about the real estate guy. He was in the real estate market. So when the depression hit, he was already in the market. He didn't wait until the depression hit, then try to jump in the market. Right? And that's something I want a lot of people to understand. That's something I try to help traders understand. The skill of trading will always be there. Right? Do you understand enough about the market to understand how to take advantage of it? Right? Because what a lot of people do is they wait and then they try to do everything at the same time. Right? Well, this and this and this and this happened. Now let me try to learn this skill and then try to be an expert at it in 60 days. It don't work that way because you ain't putting no time into it. So can you stay in the market till it turns your way? So let me give an example, right? When you look at real estate, you see a lot of different participants in it. What we a lot of times see when the real estate market is not very, I would say, robust, there's not a lot of activity, and it's going to be very localized, is you see a lot of rich women in the real estate market. And what do I mean by that? You have this archetype of woman to where she comes from a good background. Her husband normally makes enough money where she don't have to work. She'll go get her real estate license and hang it up somewhere. And she's not under pressure to really sell a lot of homes because her husband really don't need her money. So if she does 3 homes a year, that's gravy. Because she may be taking care of the kids. She may be taking care of the house. So if she does 3 to 4 homes a year, that's gravy. Right? So what does that mean? It means she's not under pressure to sell. Right? But during that time, she's networking. She's getting to know people. She's establishing herself. This may be a 3 or 4 year journey for her. Right? But it's just very gradual. Very gradual. Feel me? Because she's not under any pressure to sell. Then in her market, the area gets really, really hot. Well, you know what now? She already got a network. She's already been established. She knows people in different spaces. So now as the market starts to get hot, she's positioned to take advantage of it. So now she does 4 homes in 90 days, as opposed to the year before she did 4 homes in a whole year. Right? Another archetype is a person that they come into the market when it's hot. Right? So now the market is hot and they hear about real estate. Real estate popping off. They know somebody, they're getting big bread in real estate. So they come into the market while it's hot. But they don't know anybody. They don't have a network. They're not established. So it takes time. While they're trying to build it up, the market starts to go down. So now they're in a market with not a lot of activity now. But they need to sell though. Because they don't have a rich husband or a rich uncle or a rich father or a rich mother that's going to support them as a real estate agent. So they very much need to sell. So what happens is they get forced out of the market because what they have to do is something else that can bring in some money. But the problem is, again, when they get forced out, they're not still building their real estate career. So they get forced out for the next 3 to 4 years because they got to go take a whole nother line of work. And then what happens in 4 more years? The market now starts to run again. But what was a problem? They was out of the market. Right? So that's what I want you to understand. When we watch that margin call video, if we didn't miss it, one of the most important things the guy said is that we got to survive. What did he really mean? We got to stay in this market. Right? We got to figure out a way to stick around this market. Because if we can just stick around, we'll last. If we don't offload these bad assets, we'll get pushed out. Right? We'll get pushed out. Then we got to start all over again. You feel me? The goal of an investor, the goal of a trader, the goal of any kind of market operator is, can you stay in that market till it turns your way? That's why you see videos of Ben Mala, why he be dumping his assets. You want to know why? Because he's just trying to stick around. He knows how these market cycles work. The goal is for him to stick around. That dude is probably pushing 70 years old. He done seen a lot. He knows the goal is for me to stick around because I got children. I want to also operate in this market. So I don't want to mess it up for them by getting blown out. And they got to start over from square one. So I operate from that particular standpoint. I have a very long-term framework. But when I look at a lot of people in markets, they're not operating in a way in which they can stay in it till it turns their way. They're hoping it turns their way just because they're in it. Don't work that way. If you go into these markets, what's your time horizon to be in the market? If you say, hey, man, we're going to do land lots. How long you want to do land lots? You're going to do it for 5 years, a decade, 20 years? How long are you committed to stay in that space? If you believe it to be a good space. Now, if you get in there and be like, man, this ain't what I thought it was, and you leave in 2 years, that's different. But if you believe land lots to be a good space, how long you want to stay over there? Because you may have to stay in it for an extended period of time for you really to get what you want to get out of the deal, right? So that's what I want you to kind of understand when you're looking at markets. A lot of people, especially on this internet, everything is seen like a run and gun scenario. A lot of markets don't function that way. You could catch a run, right? You can catch a run. The problem is because you don't have the skills and the networks, unless you caught a big enough run and never have to work again, hopefully you know what to do with that money that you made in that run so you can have something to show at the end of that run. Because a lot of people I saw when real estate was running, they ain't got nothing to show for that right now, right? Because they really just was on a run. And I know one woman, she does home-based business now. She talks about during that real estate move, she was on a run. She ended up getting her home foreclosed because she said she and her husband was, hitting the islands, going to the casinos out there in Vegas. Like they from Chicago area, but they was really living it up because why? 04, 05, 06, 07, it was a run for everybody. People that was around know that time. For people that was in real estate, it was a run. I used to date a woman. She was from Miami. She lived in Lakeland, Florida at that time. And she made a lot of money in that run and then had got out. So when I started talking to her, like, oh, wait, she had a nice little house out there in Lakeland. She made her money during that run and then got out. It was a run. Lucky for her, she had a house to show for it. Right? So that's what I want you to understand. These things happen in markets. We seen during the pandemic, you had a crypto run. A lot of people made a lot of money on crypto. What they got to show for it today? Because they really never learned how to invest. They just had a run. Right? And so that's what you got to understand. You got to know as yourself, is this a run or is this really what I'm doing? But a lot of people, they don't realize they just on a run. They don't realize that. You got to know that as a savvy person, this is a run right now. Right? We just having it our way for right now. This ain't gonna last 4 years. This gonna last like 2 years, and we got to flip this into something else. So you want to kind of, and that comes from experience in the space, knowing this is just a run, right? So let's keep going. One thing about me, I want people to understand. If you bring on investors and they do not understand how markets really work, you can find yourself in a bad spot. People talk a lot about that Tulsa fund. I'm gonna tell you something. He would have had problems with that fund if he did everything right. You want to know why? Because in the commercial real estate space, double-digit millions under like $50 million is really not a lot of money in commercial real estate. You understand what I'm trying to tell you? Therefore, he would have to do multiple raises over time. Right? He had no choice. He would have had to go and find more money from somebody else or from some other parties. Right? And I just feel like the people that he brought in, because they didn't understand some of those dynamics, because they don't really understand how markets work, he was going to end up in a bad spot even if he would have did everything right. Because why? He would have to go raise more money because he can't really do a lot in the commercial space with that amount of money. Right? To really make moves in commercial real estate, you got to be throwing big bread out there, especially if you're talking about doing development on the commercial space. Right? You got to be kind of doing big bread. So that would have been the problem, is that it wasn't like he raised $200 million. Those sound like big numbers to us. Right? But what I want you to understand is that in the commercial space, that's really like, what can you really build in Atlanta on the commercial side for like, I don't know, $15 million? Like, what can you really build in Atlanta on the commercial side for 15? You know, kind of projects they doing out here? They're ridiculous. I'm talking about inside the city. I ain't talking about way, way out there, like in McDonald's somewhere or LaGrange. Like inside the city, like what can you really do? So that's what I want you to understand, is that if you bring investors on and they don't really understand how markets work, once they kind of realize that things didn't go the way they wanted to go, you can find yourself in a very bad spot. So you got to understand that when you're bringing people in. I was watching in Industry earlier today. Really, really good show. If you really want to understand how markets work, it's not based on characters, really. It's really based on how markets function, right? And there's a lot of really, really good. I didn't like Billions because Billions was really, really, like, I would say impractical, because it's impractical to where you work for a hedge fund and the guy that runs the hedge fund generates the ideas. If he's doing that, what the hell he needs you for? Right? So if you're an analyst on a hedge fund and the guy that works for the hedge fund is generating the ideas for the fund, what does he need an analyst for? Your job is to generate the ideas. So the way that thing was set up, it was too much based around the guy that was running the fund trying to be the star of the show. That's why I didn't like it. Industry's a lot of better show because it actually kind of explains you how markets work, the IPO process, what we call time and sales and trading, where at those type of trading setups, you have people that work in sales. Their job is to sell what that firm's book is. When I say book, it means what that firm actually owns to their clients, right? So the Black woman in that particular show, she worked in what we call time and sales. Her job was to sell those ideas, not ideas, sell the particular book of that firm to the firm's clients. Also to generate clients for the firm. Then you got the traders, then you got the people that are managing them, but it really goes into how markets actually function. season 3, the first 2 episodes, is really giving you a really good market education. Like, really, it is. They're going about the IPO process, the whole 9 yards. It's real. It was a hilarious scene in episode 2 where that stock starts to tank, and the way that trader talks. Anybody that's ever traded had those type of emotions. When you're looking at that chart, you're like, I can't believe this thing is selling off. Like, I can't believe it. I just didn't see this happening, right? So that was hilarious to me because I've gone through that. But it's a really, really good show. But the average person may not understand some of the dynamics on that show without some context to it. Because once you take out the sex, you take out a lot of the drugs, you know, other stuff to keep people watching, it's really a show based around the markets. But that's what that's a really, really good show if you want to kind of peep that out. So I'm hesitant to do small deals with inexperienced investors because, in my opinion, they do not understand investing well enough to be patient, what I also call timing, and deal with losses. If we're doing something scaled out and we just hand out the prospectus, that's different. But I would be hesitant if I'm taking on a team of like 10 people to invest in something, and I don't believe they really understand what's going on. Because I really believe, and I may have a fear factor issue, I may have an issue, a lack of faith, but I really believe that when they realize that, or they may lose money, which is always a possibility in investing, that they're going to blame me because they never really understood what was going on. So people have asked me to trade on their behalf. When I had a conversation with them around trading, I just really didn't think they really understood what trading actually was. And I'm talking about, this has been going on for years, right? Ever since I was teaching how to trade options, people have reached out to me and asked me, would I trade their money? I was like, no, because when I'm talking to you, I don't think you really understand what trading actually is. I think that you just think this money's just going to show up. And so it could put me in a bad position, because if I lose money, you now going to get upset at me because you never really understood what I was actually doing to make the money in the first place, right? And so I always declined it. And people have been asking me to trade for them since 2020, and I've just always declined it, right? I don't want to run a book for other people. Is there a lot of money in it? Yes. I could just go get my licensing and become a marketer like Kathy Wood and run it up. And I believe I could do that. I believe I talk well enough. I believe I present well enough. I believe I can just go get me some real nice looking suits, go get my license in it, and run up a book. But I just really feel that unless you're doing something really, really, really big, right, it can put you in a bad position because people may not understand things well enough to deal with the losses, right? I don't know how Kathy Wood does it, because all she's done is lost people money over the past decade. But she has the ability to do it. But I know with me, it'll look different if I lost the kind of money Kathy Wood lost. They talk about me like a dog. They don't say nothing about her because of conditioning and socialization. They're not going to question that Anglo woman, right? They just not. They're not going to question nothing she does. So that's why I'm hesitant to do it in any kind of project. Because if I don't believe they really kind of understand investing and really what we're doing, and they have a really robust understanding, is not that they don't understand it enough to know what we're doing. Do they understand the risk that we're taking? And do they have enough experience taking losses to be able to take a loss? Because sometimes you got to lose money investing to learn how to lose money as an investor, right? Just like sometimes as a business owner, you got to have a business go under to be able to take it, right? So if all you've done in investing is always made money, when you lose some money, you might be ready to jump out of a window because you ain't never lost no money or nothing, right? And sometimes to learn how to lose money and stuff, you got to actually go lose some money. Same thing with the people that's doing wildcatting. If you go to do wildcatting, your first 5 oil drills work, you may think it's just going to always go like that. So when your next 3 don't work, you're ready to jump out of a window because you came out of the gate so strong, you didn't deal with no trials and tribulations in the space. So that's something I want to kind of understand people know how to do before I would ever look at like taking on a small group of investors. Have you lost money in anything yet? You being accredited on paper, to me, that's not a criteria. That just means you make enough money. You know, what losses have you taken in the game? So as an investor, you need to understand that the market will not move because you want it to. Do you have the patience and understanding to deal with market volatility or lack thereof? Right? If you invest into a particular real estate market, and let's say that market goes flat for the next decade, can you deal with that? Are you composed enough just to land bank the land, right? Or did you so over leverage yourself to get this property that you need to have the property generate revenue for you relatively fast for you to make money? Because just because you put something up for rent, there's no guarantee somebody's going to jump into it and rent it from you. There's rental vacancies all over whatever city you live in, right? You understand what I'm trying to tell you? That's why you can go on Zillow, you can go on any place, you can find people that's looking to rent their house out because there's vacancies. There's no guarantee that you put the house up for rent, somebody's going to jump in there. So can you deal with that? Right? A lack of market volatility where nobody's really moving around this market. Do you have the patience to function in there? Or do you need everything to go right for you to stay in this market? Because that can be difficult when things start going against you. Right? So what I really want to help you understand from an investment risk standpoint is really understanding the market that you're involved in. Understanding the timing of the market. What kind of timing do you need for this market to work? How long do you want to stay in this market? And do you understand some of the risk associated with it? And can you take a hit? Because if you can't take a hit, it can be difficult for you, right? And so that's why I 100% agree. Some people, all they need to do as an investor is just do a 401k retire at 65 fund, because they may not have the psychological makeup for anything else. And that's not a knock on them. That's just the world we live in. Like, everybody can't do everything. So the beautiful thing about America is we do have these long-term stable funds, the Vanguards, the yada, yada, yadas, for you still to be able to operate as an investor, because everybody can't do real estate. They're not built for it. And it's not a knock on them. That's just not, they can't do it. Everybody can't do shorter term investing in the market. They can't buy Celsius and hold on it for 5 years, right? Or they can't buy Starbucks and hold on it for like, they just don't have that kind of makeup, because just because you bought it don't mean it's going to go up. It could go down, right? I'm looking at Weight Watchers, right? I think Weight Watchers potentially has a lot of potential, but it don't mean it does. It just means I think it does, right? I could buy Weight Watchers and it go even lower than what it's currently at right now. But I think they got a lot of potential there, right? But I have to have the ability to take that hit. If it doesn't, then how do I bounce back from that and keep moving into the next situation? Or does, that just destroy me? Because I can't make Weight Watchers move just because I bought it. You understand what I'm trying to tell you? There's a lot of risk associated with that play. Anytime a stock is $1 something, there's a lot of risk because there's a lot of fly-by-nighters in that stock. And for Weight Watchers to really move up, I need people to buy that stock and be with it for at least 2 or 3 years, right? But when a stock is $1, $2, $3, you're going to get fly-by-nighters where they in there for 60 days and they're going to try to get out. And that can impact the price action of the stock. But that's what I want to really help you understand. Continue to hammer in investment risk. Continue to get you to understand is that you're never too late to start investing. Even though I missed out on opportunities, it don't mean you have to, right? Even though my portfolio may not be what it could be, it don't mean that's how your portfolio has to look. So take advantage of the opportunities that are out there. Figure out what your lane and what your space is going to be. We looked at the Wildcatters. That's what they do. It don't mean that's what you have to do. But try to figure out a place in which you believe that I can build this particular stool where I have multiple asset classes that are benefiting me, and I can continue to build out from there, right? And expand. And I don't think you should just get caught up in, I'm just going to retire off the 401k, unless you just have that kind of money, or unless you're just that risk adverse, which I understand there's nothing wrong with that, right? So hope you got some value from it. We're going to read these comments. If anybody wants to come in, they got any disagreements, comments, yada, 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 they could come through, and then we're going to get out of here. Okay, so the invite is pinned. We're going to read these comments and we're going to go. So the Wealth Scientist, appreciate the 99-cent super sticker. Ray Gun, man, appreciate you coming through and being a mod. $2 super chat. Appreciate it, Ray Gun. Ken, Appreciate the $4.99. Miss Ken, appreciate it. B Phil, man, appreciate the $20. Says I only learned about not speaking jargon in tech after I joined AWS. I knew most don't know technical things, but I didn't truly learn until then. The speaking example hit. Thanks. Yes, it's something I do also. So it's something I'm also guilty of. I think once I kind of learn a space, you kind of speak the jargon in the language of the space. And sometimes you speak to people outside of the space. They don't know that language. They don't know that jargon. So what I've had to learn how to do and what I've been counseled to do is how can I define things in my own words to where people that are not necessarily experts in the space understand it. But you do see a lot of that in the tech space. I learned that when I started getting into like the crypto space, they just using words. And I'm like, I don't even know what these people are talking about. But their world is very much that jargon, right? But I appreciate the $20 super chat. So B Phil, man, appreciate the $100 absolute masterclass. Watch the series, y'all. Thank Dave, very insightful. All right, man. So I'm glad that you're able to get some value from it. And so the goal is the value that you're getting from it is going to be greater than the money that you donate to me, right? So if I can help you make X amount of money over the next few years, that should be greater than the money you gave. So I really appreciate you giving me the $100. But that's the goal of everything I'm doing. I want what you're giving to me, what I give back to you, your ability to go apply it in the market to be way greater than that. So it's essentially what you did is you got it at a discounted rate. So I appreciate it, B Phil. Donald Watts, appreciate a $99 super chat. I'm going to have to rewatch this video a couple of times. The perspective is much appreciated. I already see some aspects of this content using my current project. All right, man. So we got B Phil and Donald Watts as the sponsors of the show. Appreciate y'all coming through, man. Really B Phil with the 120. But everybody else, no matter what you gave, I appreciate it because you gave something. And that's the only thing that matters. And even if you don't have nothing to give, the fact that you just sat back and watched it and engaged, that's also important, right? So we're not really tripping on it. Let me see. Do I have any comments? So Ken, man, appreciate you hitting me on the Cash App. I appreciate it. So big up to you. Taylor D, what's going on with it? Appreciate you coming through. So B Phil says, working on a computer vision project related to data produced from easy oil. Realize that there's a lot of land that hasn't been explored in various grades of rock that are unknown. I feel you. So Ken says, I didn't know there was an option available to the public. Yeah, definitely it is. But Ken, the issue can be price point, where they want you to get in at. So I know a dude, he got a YouTube channel. I don't know his price points, but he talks about his price points often being like around $100,000. But I think it depends on the size of the project and kind of how it's constructed. But I don't know the necessarily price point, but it is open to the public because, again, they may not be able to get capital from traditional methods because what they do maybe can seem very, very high risk. So traditional financing may not be available to them, so they have to go out into the private markets, right? But through the private market, it may be available. Now, whether you may have to be accredited or not, I don't know, but it should be available through some type of private market. So B Phil says, what you learn with a geologist who works with oil companies, it's been 5 to 15 mil to drill a new hole. So I think that may be the floor. Okay, I feel you. So Quentin Jordan says, do I think oil trading market is manipulated? I used to trade oil futures, but other traders I know says it's manipulated. So I think the term manipulation in markets is being defined improperly. So let me give you a heads up. All markets are manipulated. Everybody's in the market to make it go the way they want it to go, right? Therefore, so let me give an example of like a real estate market. If something's off market and they let me know about it, right? So I can get in on it early before it goes to the public. That would be a form of manipulation because it's not like we're doing things behind the scenes to make the situation go we want it to go. Tyler Perry, because of his relationship with the mayor of Atlanta, being able to buy all that land at a discount price to build Tyler Perry Studios, that's market manipulation. Because we don't know what the price of that would have been if it would have got open to everybody to bid on that particular 300, I guess, plus acres he bought. So what I really want to encourage you to do, but also other traders to do that are listening to this, is get out of this idea that markets are manipulated. Because the goal of this is for things to go your way, right? And so if everybody's playing the same game, that's the game. Now, the question is, are they doing something that is illegal? That's different, right? So doing something, so me trading off of non-public information, that's illegal. But when an analyst goes on television and they say, we're bullish on this stock because they're trying to get good public sentiment on the stock, because their particular firm really does, they do things for that particular company from an offer standpoint, from a book standpoint. That to me, that's a form of manipulation. But I know why they're doing it. So I don't necessarily believe that stock is good just because they say it, because so the majority of market-based information, especially from the video standpoint, that's being put out by big firms where they do price upgrades and price downgrades, they have a lot of times a personal incentive to do what they're doing. To me, that's a form of manipulation, right? When short sellers give out short seller reports, and that's something I eventually want to get into, because they have a position in the stock, that's a form of manipulation, right? So the question is the market activity illegal or legal? If it's legal, they can do it. If it's illegal, they can't do it, right? So I don't even really use the term manipulation, because I feel like it's an excuse for people to not be successful in the markets. The question I ask is it legal or illegal? The large banks do everything they can do to move the markets the way they want it to go, right? That's just how this game works. And they're going to keep on doing it. They're never going to stop till somebody comes in and stops them, right? So I think I would encourage any investor, any trader, anybody that's in the markets to not get caught up in the word manipulation of the markets, to really look at it like from the standpoint of, is it illegal or legal? And do I think that the way this particular market is composed, that I have an opportunity to be successful, right? Because, we live in a world where 50% of people that get jobs get it through their network, not because they put in an application, right? So once I know that, then it means what? I got to build out my network, because I know half the time I get a job, or 50% of the people that are employed, it comes through who they know, not what they know, right? So if you look at that particular firm industry, one of the women working at that firm is because her father got her the job, not because of who she knows. The other woman working at the firm lied on her resume and said she had a college degree, which she didn't have, to get a job at the firm. One of them can do the job, the other one can't. But they both didn't get there because they went in through the front door. They did something. So I'm not telling people to cheat, lie, and steal. What I'm telling people is that if it's not illegal in the markets, I really don't try to trip on it. My question is what they're doing legal? It is what it is. So do I think oil trading is manipulated? I wouldn't really know, because I don't trade oil, but I think the people that are in the oil markets are trying to move the market so they can be successful, right? And the question I would ask myself is it what they're doing illegal or legal? Spoofing is illegal, right? But we do know people spoof. But if you get caught spoofing, you go into jail, right? But spoofing is illegal. So you do see a lot of spoofing in the futures market. But we know that spoofing is illegal. And when I say spoofing, I mean is you're giving out fake prices to move the market, and you're taking the price off the chart, right? But if you get caught spoofing, you go to prison. But do we know that people spoof? They spoof every day, right? That's why I don't really look at level 2 data like that, because I know they spoofing, right? I just like to look at the chart and the fundamentals. I don't like level 2 data because I know everybody is spoofing, especially with all these computers out now. So that's a form of manipulation that everybody does. Right? They put bids up there, they put ask up there, they pull them to move the market where they want it to go, because they know the algos are going to get triggered by the price that they see. It's just the world that we live in. But that's a great question. So Ant Dog says he was watching a Wild Kind of documentary last night. That's ironic that I mentioned it. I feel you. See, Simon says, watch out for sunk cost bias. I feel you. Macamille says market maker ain't nothing because they just have liquidity. Okay, I feel you. Quentin Jordan, you say, appreciate the explanation. I appreciate you asking the question. So that's pretty much going to be it. That we had an hour. Appreciate everybody for coming through. So I want to really encourage y'all to watch every video in the series. We may do a few more before the end of the year. But I really want to try to help you understand things as an investor, but also make sure that you don't miss out on the opportunities that I missed out on, right? Investing a lot of times can work for you if you just take a very long-term patient approach, but also can work for you on shorter-term time span. But I want to really encourage you to make sure that you know the risk that you're getting involved in. You understand where you're at in the market, what your position is, and you're also in a position to take that loss, and the loss don't destroy you, because the most important thing is, as an investor, is you can stick around for the market to come back, right? That's the most important thing, is that you can stay in the market, right? Hope you got some value from it. David W. Williams, also known as Diamond Dave. I'll talk to you later.